In this video, we're going to review Warren Buffett's 12 best stocks to buy and hold forever. So, before we start, please like this video and subscribe to our channel for weekly updates. Let's get started. Warren Buffett's strategy is to find stocks to buy and hold onto. He thinks that the best names to buy and hold are those of undervalued companies that have a good chance of doing well in the long run. Buffett's Berkshire Hathaway ticker, BRK.B, which invests in these types of stocks and other types of stocks as well, is a good example of this investment strategy. Over the past 10 years, Berkshire Hathaway has given an average annual return of 11.39%. Let's go over our list of the top 12 stocks to buy now and hold forever according to Warren Buffett. Number 12. Coca-Cola, ticker, KO. Many investors are aware of the connection between Coca-Cola stock and Warren Buffett. Buffett famously showed Coca-Cola products on TV during his press interviews and reportedly continues to drink 5 cans of Coke daily. Buffett clearly enjoys the company's products. More importantly for investors, he loves the company's shares. Berkshire Hathaway owns 400 million of Coca-Cola's 4.32 billion outstanding shares. Consequently, his views on Coca-Cola's prospects move its share prices significantly. So, any purchase or sale of KO stock by Berkshire Hathaway is consequential. Berkshire did not buy or sell KO stock in Q2 of 2022. But the company's decision to hold on to all of its KO stock shows that it remains confident in the name. Coca-Cola's long-term outlook remains very solid, and the mature firm is clearly capable of continuing to drive top-line growth and provide investors with returns. Its revenues increased from $37.3 billion in 2019 to $38.7 billion in 2021. During the same period, its earnings per share went from $2.11 to $2.32. All of this indicates that Coca-Cola will grow steadily over the next decade. The company will continue to return money to investors via its dividend, which has not been reduced since 1963. Number 11. Apple, ticker, AAPL. Apple has been one of the most successful stocks over the past decade. During that period, the annualized return of Apple stock averaged 21.17%. Those returns outpaced those of the tech-heavy Nasdaq by 81%. Capital invested in Apple shares multiplied in value by nearly 7 times in that span of time. If the past is prologue, buying and holding Apple shares for the next decade is a smart idea. The outlook of Apple stock remains bright moving forward. Quantitative tightening has drastically impacted tech stocks in 2022. But one firm believes that Apple shares can more than double in price in the next 5 years, reaching nearly $360. The same source predicts that Apple could rise to $445 by 2032. Apple stock constitutes the largest holding in Warren Buffett's portfolio, accounting for more than 40% of the value of his stocks. It appears that Apple will remain among the most important companies in the world for the next decade. Consumer demand isn't waning despite the economy's slowdown, and Apple reported record revenues when its earnings were released in late July. It's an easy, smart choice. Number 10. American Express, ticker, AXP. American Express stock is in a unique position. Like all companies, American Express may have to cope with a recession. Almost every company's financial results are negatively impacted by recessions. American Express could fare better than most companies during an economic downturn. That's because it caters to relatively high-income earners who are less likely to lose their jobs during a recession. The company provides credit cards that come with high annual fees. The fact that its members can afford those annual fees, as high as $695, suggests that their spending will be more resilient during recessions. So AXP stock is likely to perform better in the short term than other firms. The long-term outlook of AXP stock is strong as well. Analysts, on average, expect the company's revenue to exceed $52 billion in 2022 and rise to $58 billion in 2023. Number 9. Kroger, ticker, KR. The Kroger Company is the United States' largest supermarket operator by revenue and 5th largest general retailer. Those investors who are bullish on Kroger's stock contended that shoppers were increasingly purchasing food from the grocery chain. Rather than pay for expensive meals at restaurants, they noted, people were instead shopping at Kroger in order to reduce the amount of money they spend on food. That trend was reflected in the firm's Q2 earnings as its sales jumped 9.15% year-over-year in Q2 to $34.6 billion. Strong cooking at home trends look poised to continue throughout the remainder of 2022 as September's inflation data tell a grim story. Kroger increased its full-year guidance when it released its Q2 earnings in early September. When the company reports its Q3 results later this year, it's possible that its guidance could increase again. In any case, the short-term outlook of Kroger's business is positive. Kroger's long-term outlook could be especially positive as KR is planning to buy its smaller rival Albertsons. The $24.6 billion purchase would create a grocery giant. As a result, if the deal is approved, the newly created company could rival Walmart as the largest seller of groceries in the U.S. Number 8. McKesson Corporation, ticker, MCK. Warren Buffett chose another long-term winner in McKesson stock. Like the other equities on this list, its returns over the last decade have been impressive. Its annualized returns averaged 15.6% over the last decade. Capital invested in MCK stock 10 years ago would have more than quadrupled in value. McKesson is a pharmaceutical supply chain management firm. Specifically, the company optimizes the delivery of pharmaceuticals and other healthcare products. The demand for these offerings does not vary much based on economic growth. McKesson has built a large network that continues to perform well. In its most recent reported quarter, its revenues increased 7% year-over-year to $67.15 billion. McKesson was hit by higher costs and its earnings, excluding some items, slipped 3% year-over-year. But because the government spent money on things related to the pandemic, its full-year EPS guidance went up by a lot. Perhaps most importantly for long-term dividend investors, McKesson increased its dividend by 15% from 47 cents to 54 cents per share. Number 7. DaVita, ticker, DVA. DaVita provides kidney care and dialysis treatments to patients with chronic kidney disease. Chronic kidney disease is caused by several factors. However, high blood pressure, heart disease, and diabetes are the primary drivers of the disease. DaVita stock hasn't performed as well as many of the other stocks on this list over the past 10 years. Overall, it performed 5% better than the New York Stock Exchange where it is listed. Capital invested in DaVita would have appreciated in value a relatively modest 59% over that period. But the reason to invest in DaVita for the next 10 years relates to America's obesity epidemic. More than 42% of Americans are now obese, the highest rate ever. That means the rates of heart disease, high blood pressure, and diabetes will continue to increase. So the demand for DaVita's treatments is likely to increase as more and more Americans are diagnosed with the disease. Number 6. Amazon, ticker, AMZN. Buffett is famous for a general aversion to technology companies, but he's made an exception for e-commerce titan Amazon. People do more shopping online today than ever before, and Amazon is the unquestioned leader in that game, with a 37.8% market share of e-commerce sales in the United States. The stock is one of Berkshire's smaller positions, worth just over $1.4 billion and logging in at 0.4% of the company's portfolio. Amazon is known for its e-commerce business and that's probably not going to change anytime soon. But investors could benefit from the company's other business segments that have room to grow over the coming years. Amazon Web Services, AWS, has become the largest public cloud platform in the world. It's highly profitable and was responsible for all of Amazon's total operating income in the second quarter of 2022. Research company Gartner estimates that end users will spend as much as $600 billion on public cloud services next year, up 46% from 2021 spending levels. AWS's revenue over the past year is $72 billion, which shows that there's still room to expand within an already rapidly growing market. Considering this, along with its tremendous e-commerce business, Amazon could remain a lucrative investment for years. Number 5. United Parcel Service Incorporated, ticker, UPS. United Parcel Service Incorporated is an American multinational delivery, transportation, and logistics company. Warren Buffett added United Parcel Service Incorporated to his portfolio in Q4 2010 and has consistently held his stake over the years. As of Q2 2022, the billionaire owns 59,400 shares of the company worth about $11 million. United Parcel Service Incorporated declared on August 4 a $1.52 per share quarterly dividend, in line with previous expectations. The dividend is payable on September 1 to shareholders of record on August 15. The stock delivers a dividend yield of 2.95% as of August 2022. Evercore IC analyst Jonathan Chappell on August 22 downgraded United Parcel Service Incorporated to in line from outperform with a $214 price target. As a global enterprise with significant exposure to the consumer economy, the unpredictable macro environment, especially related to consumer spending, provides further questions about a recovery in demand and could pressure earnings estimates for the second half of 2022 and 2023, the analyst told investors. Number 4. U.S. Bancorp, ticker, USB. U.S. Bancorp is an American bank holding company for the U.S. Bank National Association. The bank specializes in consumer banking, corporate banking, insurance, investment banking, mortgage loans, private equity, wealth management, and financial analysis. U.S. Bancorp has been featured on the Berkshire portfolio since the last quarter of 2010. In Q2 2022, the hedge fund held about 120 million shares of U.S. Bancorp, worth $5.5 billion, representing 1.83% of the total portfolio. In July of 2022, Morgan Stanley analyst Betsy Graseck maintained an equal weight rating on U.S. Bancorp and lowered the price target on the shares to $54 from $66. Morgan Stanley slashed estimates across its U.S. banks and consumer finance coverage as recession risks multiply. The analyst and her team are reducing 2023 EPS estimates by an average of 7% and target multiples in the group by an average of 8%, leading to a median 15% cut to price targets. Number 3. The Procter & Gamble Company, ticker, PG. The Procter & Gamble Company is an American multinational company that sells branded consumer packaged goods worldwide. The Berkshire portfolio had 315,400 shares of the Procter & Gamble Company in the second quarter of 2022, worth $45.3 million. The hedge fund has maintained a position in the company since the first quarter of 2013. On July 29, the Procter & Gamble Company reported earnings for Q2 2022, posting an EPS of $1.21, missing Wall Street consensus by 2 cents. The revenue of $19.52 billion outperformed estimates by $104.13 million. Barclays analyst Lauren Lieberman on August 2 reiterated an overweight rating on the Procter & Gamble Company and lowered the price target on the shares to $154 from $157 after the Q2 results. The analyst thinks that the Procter & Gamble Company's business model needs to be more defensive during this economic cycle for share price outperformance. Number 2. Johnson & Johnson, ticker, J&J. Johnson & Johnson is an American multinational healthcare firm. Warren Buffett's Berkshire Hathaway has been a long-term shareholder of Johnson & Johnson, with the stock featured on the portfolio since Q4 2010. In Q2 2022, Buffett's fund owned 327,100 shares of the company worth $58 million. On August 19, Johnson & Johnson declared a $1.13 per share quarterly dividend, payable on September 5 to shareholders of record on August 23. The company is a reliable dividend king, with 58 years of consistent dividend growth under its belt. In July of 2022, UBS analyst Kevin Caliendo assigned a neutral rating to Johnson & Johnson and lowered the price target on the stock to $180 from $185. The company's Q2 results confirmed the macro undercurrents, which include significant currency movement, high inflation, and slow elective procedure recovery, the analyst told investors in a research note. Number 1. MasterCard Incorporated, ticker, MA. Berkshire Hathaway has owned a MasterCard Incorporated stake since the first quarter of 2011. In the second quarter of 2022, the hedge fund held about 4 million shares of MasterCard Incorporated, worth $1.25 billion, representing 0.41% of the total 13F securities. In July 2022, the company reported its Q2 results, posting earnings per share of $2.56 and revenue of $5.50 billion, topping market estimates by 20 cents and $236.62 million, respectively. In August of 2022, Daiwa analyst Kazuya Nishimura downgraded MasterCard Incorporated to neutral from outperform with a price target of $375, down from $385. With border restrictions largely lifted, he sees lower scope for earnings to outperform market expectations, the analyst told investors. He also sees a potential dearth of positive catalysts over the near term, but added that MasterCard Incorporated's medium to long-term growth prospects is healthy and the company is strongly positioned to get returns from investments in the travel sector. Which of these Warren Buffett stocks would you like to add to your investment portfolio and hold for the long term? Tell us in the comments section below. For weekly updates on the top stocks to buy and the newest wealth-building investment strategies, don't forget to like this video and subscribe to our channel. Happy investing and thanks for watching.